Wrapping up this second week of January has meant getting two very conflicting inflation data points. And it's created a lot of havoc. So if you're wondering why is this market sort of a mosh pit, CPI was hot, PPI today was not. CPI sent expectations for rate cuts in March a little bit lower, but still probable. And Friday's PPI sent them back up and made them much more probable. So a lot of back and forth confusion about the macroeconomic data that ultimately maps to what the Federal Reserve is going to do. And that's the big theme for this year. Traders and investors are looking at the Federal Reserve to start cutting rates. And as I've said, you don't want to be a bear when we've got this kind of pivot on the horizon. We want to find strong stocks, strong sectors, strong indices, strong commodities, and buy into support. Yeah, buy the dip, right? One of the things that's really interesting that's happening right now is I'm going to share with you two things. One of the things that I've been doing here in the office the past, oh gosh, I'm recording this live right now with the Sector Secrets Mastery folks and the Futures folks. But how long have we been working on this indicator here? I'm trying to remember. It's been a bit. We've been working on how we can find momentum and trend at a glance. 9 months now. Okay, 9 months. How do we find momentum? 9+ months? Wow, okay. It's a blur. How do we find momentum and trend at a glance on any time frame? Now, that's not enough, right? I think getting that structural read, right? Finding out what the quality of the trend is step one. It's only step one. Step two is then what zone becomes viable. And let's take a look at the S&P and how this would map to the SPX. Thinking about momentum and trend. If a momentum persists long enough, it becomes a trend. By the way, which is more important? A trend. Why a trend? Because trends are where follow through is at. You remember 2020? I know, it almost brings a tear to your eye. When we think about those years, those days, those months and weeks where trading is feeling really good and easy, it's not because we had momentum alone. That's only one piece of it. It's because of momentum organized into a trend. So we need both measurements. We don't have the same quality trend in this environment. Things have been choppy. You might say, no kidding, Rog. But when did that start to shift? It started shifting on the 8th of January on the S&P, which means then it was starting to shift around the same time, the 8th of January on the SPX. It's so important. If we have a trend shift, that means we do not want to be aggressive on our entries. That means momentum traders don't do that on the daily time frame. Momentum traders shift gears and look for support levels to buy. And remember, we need a couple different strategies. The idea that one strategy is enough, that's holy grail stuff. That's what new traders and inexperienced traders want to find. I wish it existed. I've been doing this for 30 years. It doesn't work. But you know what doesn't work? And I love this analogy. If we are golfers, let's say all of us are going to go hit the golf course. And don't worry, if you don't like to golf, we can go fishing too. The analogy works. The lay of the ball, the distance of the pin dictates the club. Would you play golf with one club? Not could you. Not could you. Wouldn't it be more effective to have multiple clubs in your bag to play golf? And of course, the answer is yes. We're going fishing. We're going to cast a shoreline in brackish water. Is it deep? Is it warm? Right? What's biting? We're going to pick a different lure. I wouldn't just have one lure, right, and take my flats boat down to Flamingo hoping to catch fish, right? I'm going to look at the conditions. Traders do the same thing. At least the smart ones do. We don't think there's one magical unicorn way, just like there's not one magical club or one magical lure. If we take an assessment of the overall structure, focusing on momentum and mostly trend, we're going to do a lot better. So take a look at how often the S&P has dipped into the gray zone and then gone into the gold. Gray is your entry, gold is your exit. And that's going to map to SPY, SPX, and MES. The other question I've been getting a lot of lately are what's going on with the Magnificent Seven? So we can talk a bit about sector rotation here. And this applies to futures trading, ETF trading, and stock trading. Index, sector, stock. We really cannot separate these, right? Index, sector, stock. So if I'm taking a look at Microsoft, a lot of folks are looking at Microsoft today in the mastery of a number of people that are long Microsoft, but not from today, right? Why? I can't be aggressively buying into highs. I'm going to be at a distinct disadvantage if I do that. What do I want to do? Well, the gold zone is resistance. The gray zone is support. If I can trade down into these gray zones, there's my opportunity. Was there an opportunity to get into Microsoft today? No, but there was the previous 2 days, right? So focus on where the support is at. Then let's take a look at NVIDIA. Sector rotation has hit XLK, which is where Microsoft and Apple reside, and SMH, which is where NVIDIA as well as Intel and AMD reside. Sector rotations hit those two the hardest. Doesn't mean they're not capable of moving higher, but we've seen profit taking in the hottest two sectors of 2023, semis and tech. We've seen some sector rotation to laggards, namely healthcare. We'll talk about healthcare in just a bit. So NVIDIA, what would I want to do? What are the zones? Okay, first of all, let's start at the bottom of the chart. Every time, let's build the foundation from the bottom up. This is exactly what we do with every trade in the mastery. Everyone can see here, green momentum, green trend. What's more important? The trend. What else can we use to confirm the bullishness? The candles. They're all mostly green except for a handful of blue, which is simply neutral, right? Neutral is not a trend break. Neutral is not anything more than a wobble, right? Now, as this thing's moving higher, most traders are going to do what? And not that it doesn't work. Most traders are going to buy here and here and here. And in an overall movement higher, especially with bullish momentum, it could work. But what's going to give you greater return and lower risk? Really simple, gang. Buy the gray zone. Buy the gray zone, not the yellow. And why do these zones work? I think everyone knows anecdotally that every symbol out there has a typical characteristic. We say some things are volatile, some things are quiet. We kind of anecdotally know that some symbols have a way of moving. But it probably wouldn't surprise you then, if you already know that there is a set number of points, high, average, and low, that a typical stock, futures contract, ETF tends to move. Crunch that data, and what you get are volatility-based support and resistance levels. So let's take a look at them in Amazon. Can I be aggressive in Amazon? No, I actually need to be a little bit more conservative because momentum's turned a little bearish these last two sessions, but the trend is neutral. So I still want to be a buyer. When I look at this zone, how aggressive do I want to be? I probably want to be somewhere in the bottom half of this zone. I want to be in the bottom half of the zone on a pullback buy with the momentum being red. When the momentum was neutral and the trend was neutral, I don't have a problem buying in the upper half of the zone, which brings me to second point. Structure is step one, but automating your zones is step two. Now, whether you're using support and resistance based on trend lines, I love to use the automation of the Darvis. Maybe you're using moving averages. That's all fine. That's not where the wheels fall off the wagon. I'm not here to tell you there's a super secret indicator. All I will say is you probably don't need, I'm pretty sure about this, you probably don't need another price-based indicator on your chart because there's probably 100 ways you're already looking at open, high, low, close to generate some sort of level or zone. So that's where I encourage traders to look at time, volatility, and volume for alternate levels for support and resistance, this of course being volatility. Now, in this example of Amazon, I want to be probably the lower half of this volatility zone because the momentum is a little bearish, the trend is neutral. Let's take another really popular symbol that frankly I do not like to trade, but I've been warning traders for a while, be wary of being bullish here. Okay, and where do we want to make that shift? This is really cool. I know a lot of folks love Tesla. North of the 200, sure, buy. Feel free to look for buys in the gray zone, right? Is there a trend here? It's not my favorite, but you know, we can do that. Once a stock dips back below the 200, things get bearish. Things get really, really toppy. I don't like trading Tesla. I actually don't have any skin in this game. But when folks ask me, what would you do now with Tesla? Well, what do you think? What do you think we would do here? Red candles below the 200. You bet. It makes a lot more sense, here we go, to watch the gold zone, the resistance zone. And at some point, we're not there yet. You might say, but Rog, when could we buy Tesla? I'll tell you right now where you could buy Tesla. If price can get down to the DPMR. Now, today's DPMR is not going to be Tuesday's DPMR because this updates with every single session to show you Tuesday's volatility, Wednesday's volatility. You start the day off with these zones out there. But we do have the best oscillating, overbought, oversold indicator that's built into every platform, a slow stochastic. That slow stochastic is oversold. It's in a neutral environment. If we can get to the daily price movement range, that's what we're looking for. And a lot of folks ask, okay, Rog, what can we do with Tesla? That's what I would do with Tesla. Meta is another one. Let's talk about the Magnificent Seven. And whenever we're talking about Magnificent Seven, remember, we're talking about the NASDAQ. Those 7 stocks are the top 2 or 1 weighted stock in the 4 most important sectors of the NASDAQ: tech, communications, consumer discretionary, and semiconductors. So Magnificent Seven is really just a question about where is the NASDAQ going. Take a look at Meta. Meta's in an uptrend. Meta's been mostly bullish momentum, so that's been good. We want to be a little bit more aggressive on the zones, and now it's bullish trend again. You bet. If we can get a move down to the daily price movement range, we can buy something like Meta. And I mentioned NASDAQ. We talked about the S&P. Let's wrap up our conversation with QQQ. QQQ is not as bullish as some of the other stocks and or ETFs out there. In fact, Meta looks better than QQQ, and that brings us to trade this, not that. Are we going to be better off trading some individual stocks that seem to be more bullish, holding their zone a little bit better? Here's AMD, here's Intel, right? Or is QQQ the only way to go? No. Do the trade this, not that exercise. What is more bullish? You know what I don't like about QQQ, and it's going to have me adjust the way that I buy it? That red momentum. I'm getting an early sign of red momentum. Remember, having this is only step 1. It's an important step, but that's step 1. Step 2 is, have you automated your zones? And what does the color change tell us? Right? What does the color change tell us? Let's be a little bit more on the bottom half of the daily price movement range with that little bit of red momentum. If we go back to neutral, we can go back to the upper half of the daily price movement range. But if that momentum stays red, let's go with the lower half. These are those adjustments you can make when you prioritize trend and then understand the context of momentum within that trend. I hope that helps. This is what I'm going to be looking for next week. I'll see you all in Top Tier Outlook at 6 p.m. on Sunday evening. Of course, we have a nice 3-day weekend coming up. I hope everyone spends some time away from the charts, but I hope this gives you a great primer for what we're going to be doing in the mastery when I see you all next week. All right, gang, be good to each other. Thanks as always. Thanks for loving trading. Thanks for being a part of the Simpler Trading family, our community. I'll see you next week.